Palantir closed on Friday at $152.67. It's currently sitting at $157.16. It's up 2.94% today. On a 5-day chart, it's up 11.58%. On a 1-month chart, it's up 9.97%. On a 6-month chart, it's up 0.68%. Year to date, it's down 11.58%. On a 1-year chart, it's up 85.09%. Over the past 5 years, it's up 556.2%. And on a maximum chart, it's up 1,608.26%. That goes all the way back to October 2nd, 2020. So they haven't been public for too long. Not really. I remember when Palantir was like $10. Should have bought. Actually, I did. I traded it in and out of it, but I just never held it. Regardless, this is not about me, guys. So the PE ratio on Palantir is 248.09. My word. With 2.29 billion shares outstanding and 4,000 employees. They have a 52-week high of $207.52, a 52-week low of $66.12, and an EPS of 63 cents. Has a market cap of $375.72 billion. Jeez Louises. Old Palantir. Let's look at their earnings. Their most recent was posted on February 2nd, 2026. And they beat by 8.6%. They were predicted to get 23 cents. They got 25 cents. They also beat on revenue. They were predicted to get $1.34 billion. They got $1.41 billion, beating by 4.88%. You can listen to their conference call. It's about 47 minutes long if you want to do that. I'm not doing that right now, but let's keep it moving. There we go. The perspectives from across the web. Palantir recovered sharply in early March 2026, gaining over 14% recently. Surging demand for AI-driven defense solutions and record-breaking Q4 results acted as primary catalysts. Analysts project continued expansion through next quarter, through high valuation and heavy insider selling remain key. Sorry about that. Though high valuation and heavy insider selling remain key points of debate for market sentiment. Interesting. The bullish view. Explosive revenue and guidance growth. Palantir reported a 70% year-over-year revenue increase to approximately $1.41 billion in Q4 2025, significantly beating expectations. Management issued a bullish 2026 forecast, guiding for roughly $7.19 billion in full-year revenue, representing a 61% increase fueled by a 143% surge in contractually obligated sales backlog. Defense sector tailwinds and AI demand. Intensifying geopolitical tensions and rising demand for military-grade AI solutions have driven recent price appreciation. The company recently secured a major Department of Homeland Security contract and expanded in its U.S. Navy partnership. While analysts highlight an opportunity to replace restricted AI technologies in federal agencies with Palantir's specialized platforms. Scary. Spooky. Scaling profitability and commercial adoption. U.S. commercial revenue more than doubled in the most recent quarter, rising 137% to over $500 million. The company achieved record GAAP profitability, with net income reaching approximately $609 million, while maintaining an exceptional rule of 40 An exceptional Rule of 40 score near 118%, reflecting efficient growth at a massive scale. Okay. Let's do the bearish view. Extreme valuation concerns. Palantir maintains a high price-to-earnings ratio of approximately 233, leading some analysts to warn of a potential crash. Critics argue the current price-to-sales multiple is historically unsustainable for software stocks, making the asset predisposed to sharp declines if AI spending sentiment shifts or economic news turns negative. Substantial insider selling activity. Heavy insider selling has been observed recently, with executives and 10% owners disposing of over 1 million shares valued at approximately $142 million in the last 90 days. Notably, CEO Alex Karp and other top insiders reduced their positions in late February 2026, which can impact broader investor confidence. Oh. Okay, so we've got a series of articles here. Let's try to pick one that is going to work. Here, let's try this one. No, let's do this one. 40 minutes ago. S&P 500 movers. Trade desk surges on CEO buy. Palantir rides geopolitical wave. CrowdStrike earnings and press. Quick read. The S&P 500 dropped nearly 2% last week, but some stocks were big winners. The trade desk jumped 22.9% following CEO Jeff Green's massive $148 million stock buy. That made the trade desk the number one performer in the entire S&P 500 last week. Palantir and CrowdStrike also saw big jumps last week. CrowdStrike's first gap profit and Palantir's defense tech positioning amid a Middle East strikes drove the two stocks higher despite a general market sell-off. Nvidia made early investors rich, but there is a new class of next Nvidia stocks that could be even better. And if you want, you could learn more here. Dogs come in here and act a freaking fool. Okay. This is by Eric Bleeker, published March 7th at 3:14 p.m. That's earlier today. The S&P 500 fell nearly 2% on the week, while the Nasdaq 100 dropped about 1.2%, and the Russell 2000 small cap index tumbled over 4%. The VIX fear gauge climbed to 29.49 and is now up 70% in the past month, reflecting genuine investor unease. Geopolitical tension in the Middle East, tariff uncertainty, and a choppy macro backdrop kept broad indices under pressure. Yet a handful of S&P 500 names surged double digits, driven by earnings catalysts, insider conviction, and defense sector tailwinds. The trade desk is up 22.9%. Intuit's up 17.6%. LyondellBasell Industries is up 16.7%. CF Industries up 16.3%. Expedia Group is up 15.7%. Apple 11 is up 15.5%. CrowdStrike is up 15.3%. ServiceNow is up 15.1%. Palantir is up 14.6%. And Workday is up 12.9%. They've got a little graphic here if you want to look at that. It's just showing those percentages. Let's dive into why the trade desk, CrowdStrike, and Palantir saw such strong gains in the past 5 days. CrowdStrike posted its first ever GAAP profit. CrowdStrike reported 2026 earnings on March 3rd, and the headline that mattered most wasn't revenue growth, it was the bottom line. CrowdStrike recorded its first ever positive GAAP net income of $38.69 million, flipping from a $86.29 million loss in the same quarter a year ago. Revenue grew 23% year over year to $1.305 billion, edging past estimates. Ending ARR hit $5.25 billion, up 24%, while net new ARR of $330.7 million surged 47% year over year. A record free cash flow margin came in at 29%. 47% year over year is a record. Free cash flow margin came in at 29%. That's a more accurate way to read that. Fiscal year 2026 will go down in our history books as CrowdStrike's best year yet. As enterprises rapidly adopt AI, CrowdStrike is mission critical infrastructure, securing AI across every layer from GPU to agent to prompt. That's CrowdStrike. I don't know why we're reading CrowdStrike, but I guess it's all relatable. It's all related. George Kurtz, CEO of CrowdStrike, Morningstar raised its fair value estimate from $410 to $460, while Barclays maintained a buy with a $550 price target. The stock jumped over 4% the day after earnings and finished the week up 15.3% on the week. A geopolitical tailwind helped too. 149 hacktivist DDoS attacks hit 110 organizations across 16 countries following Middle East conflict escalation, putting cybersecurity names in focus. All these ads, God. We were live blogging CrowdStrike's earnings, and I walked away generally impressed. Net new ARR hit 47%, and the company's guidance for fiscal 2027 slightly exceeded Wall Street expectations on the revenue side. Here we go. Palantir. Palantir rides the defense tech wave. Palantir gained 14.6% this week, driven more by geopolitics than earnings. U.S. military strikes against Iran sent defense stocks surging, with Palantir joining Lockheed Martin and RTX near all-time highs. Palantir sits at the intersection of AI and national security. Its AI platform is deeply embedded in Pentagon intelligence operations, making it a direct beneficiary when defense spending sentiment spikes. The company's Q4 2025 results showed U.S. government revenue of $570 million, up 66% year over year, and management guided for full year 2026 revenue of over $718 billion. Prediction markets confirmed the bullish conviction that Polymarket contract for Palantir closing above $144 for the week resolved yes, with near certainty, with that market drawing the highest trading volume of any price bracket. That's so stupid. But whatever. Trade Desk CEO bets $148 million on a comeback. Trade Desk was the week's biggest gainer at 22.9%, fueled by a stunning show of insider conviction. The biggest gainer among those stocks. I bet I could find a stock that gained more than that. Acquiring nearly back to the article. Acquiring nearly $6.4 million class 6.4 million Class A common shares near the stock's multi-year lows, the largest insider purchase in company history. TTD is down nearly 55% over the past year, battered by a disappointing Q3 2025 earnings miss and competition concerns from vertically integrated platforms like Google and Amazon. Green buying at these levels signals he believes the sell-off is overdone. The market agreed, at least for now. Reddit's stocks lit up with titled, The Trade Desk CEO Jeff Green bought $148 million worth of shares in the last 2 days, accumulating over 550 upvotes and 100 comments. A thread on Reddit Wall Street Bets drew over 838 upvotes, with retail investors broadly reading the purchase as a confidence signal. Reports of early-stage talks between OpenAI and Trade Desk on a potential advertising partnership circulated midweek, giving bulls another reason to pile in. Analyst consensus sits at a target price of $31.89 with 19 buy or strong buy ratings against 15 holds. The stock closed the week at $29.28, still well below its 52-week high of $91.45. Against a week where the broad market struggled and the VIX climbed, these three stories showed that individual catalysts still move stocks. Earning milestones, geopolitical tailwinds, and management conviction can each cut through macro noise. Palantir, they're here. As things heat up in the national war situation, or global war situation, I guess you could say, Palantir's probably going to see some gains from that. They make money off of that stuff. So something to think about coming up. I don't own Palantir. Probably not really going to buy Palantir anytime soon, but you never know. It's just not, it's not for me. Maybe it's for you. Check it out. See what you think. Like and subscribe, guys. All right.